Oil daily forecast, January 10th, FXEmpire.com. As you can see by this daily chart of the light sweet crude contract we are looking at, that we have fallen for the session on Monday, but interestingly enough, bounced directly from the $100 mark to form a very supportive hammer. Now, there are several different things going on at the same time in this market. One of the things that you have to be aware of is the fact that the 105 area, and I will draw this as a thick line, is massive resistance. So it is because of that that we feel a daily close above the 105 mark is actually our buy signal. As many of you know and been watching us, we have had, go ahead and take this out, we have had our eyes on a possible bullish flag that was formed over the course of the last several months. As you can see, we have broken out, we've come back and we've retested that area. Now the question is do we go forward? With the aforementioned 105 level, though, that's the one caveat you need to kind of keep your eyes out. And it's really about 104 to 105. It's kind of a thick zone. That's not uncommon in these more important areas, shall we say. So we do have a breakout of the flag, and this measures to roughly 130. And as a result, that is where we want to go if we do end up buying. But let's define when we want to buy. Of course, daily close above 105 is needed because between here and there, there's just simply far too much noise. And let's face it, there's a lot of different things driving price at the moment. The Iranian situation, the threats of blocking the Strait of Hormuz, is one. And that seems to go back and forth with the Iranians making threats, the Saudis saying that's fine, we can pick up slack, the U.S. military saying that would be an act of war, and on and on. So there's a lot of different things going on in that dynamic, and it's very difficult to trade geopolitical risk, as many of you know if you've dealt with the euro recently. So having said that, we are going to have to watch the charts, and the 105 close on the daily or above is a buy signal, and we think that goes to about 130, and that probably signals some kind of escalation, if you will, of the situations in Iran. Of course, there's other things that can drive that too, but truthfully, demand is not one of them. The EU is almost certainly going into recession, and China is slowing down. So having said that, the demand should go down. If the situation cools down, there's a very good chance that we would close under $100. And at that point, we're willing to sell, and we're going to aim for roughly $90 first. As you can see, that was a significant area. And then, of course, if we can get through 90, we'll go to about 80. Anything below 80 would signify probably a recession around the world, and that would be a fluid situation that we'd have to assess as we got that low. But if we see the oil markets below 80, that means that something bad has happened financially more than anything else, would be my suspicion. So currently we're kind of in no man's land between 100 and 105, but we are using those two as a bit of a measuring stick to see where we go forward. Again, if we can close on a daily above 105, we're buying and holding on for quite some time for about $25. Huge, huge play in the futures markets. If we close below 100, we're going to take it probably $10 at a time. We might even take it $5 at a time and just kind of play it by ear. I think that the real chance of a big move is probably to the upside. The downside will probably be more of a grind with a lot more noise.